Cast is now starting. All attendees are in listen-only mode.
Hello and welcome to this special midweek webinar. I am Devarsh and I am joined by my colleague Nagaraj. Hello Nagaraj.
Hi, welcome to Midweek Market Outlook webinar.
Okay, so first I'll talk about our recommendations and then Nagaraj will give us the outlook from the market from the technical charts perspective. And then again I'll also come back and discuss open 4 new recommendations on the fundamental side which we have issued this week. So as you know, we have been aggressively bullish on the markets from the 1st of May, and we have issued 90 BNPL or buy today, pay later kind of MTF e-margin recommendations, buy stocks, pay later, and 90 of them have achieved their intended targets, anywhere between 12 to 20% kind of returns we have got in these 90 recommendations. In this series, we have also issued 3 more recommendations this week: India Glycol, MRPL, Tatacom. Apart from that, other couple of two more recommendations were also issued today. So 5 new MTF recommendations. 91 fundamental recommendations have also hit the targets. 2 which achieved the targets this week, India Bull and VST. Apart from that, another 4 have been issued this week: Fusion, Aster DM, Link, PAN, and Datamatex. Another 4 have been issued this week: IRCTC, Navin Fluorine, Equitas, and Deepak Fertilizer. So these are the earlier I said these were the ones who have achieved the targets. These 3 have achieved the targets, while these 4 have been issued this week. So these 4 have new MTF and 4 new fundamental recommendations have been issued this week. Another 8 new recommendations have been issued. Apart from that, another 18 recommendations are there open for you for the longer term to be accumulated via systematic investment plan. So those investors who do not want to trade frequently but wants to build a portfolio for longer term can have a look at these 18 stocks. So whether you are a long-term investor, whether you want to trade positionally through technicals or invest in fundamental ideas, all 3 categories we have open recommendations. All 3 categories new recommendations have been issued. Now for the short term, those people who want to understand markets from technicals, I'll invite Nagaraj to share view from the charts perspective. Over to you, Nagaraj.
Thank you, Devarsh. My chart is visible, right?
It is visible. Go ahead.
Okay. Hello, friends. Now I will discuss about the technical aspects of the market. Today, what we have seen, this chartically, you must be understanding that the sharp selling pressure that emerged from the market. Last 3 session, market was opening higher, and afternoon it was they were showing lowers, but lower level recovery has not been there today, as market kept on declining towards last 30-40 minutes and 1 hour, you can see, and closed at the lower end. This is the intraday chart, the gap up opening and the sideways range movement. The opening upside gap has been fizzled out and failed completely during its decline. So on the daily chart, this is the scenario what is happening. For the last 5 to 6 weeks, market has been in a consolidation mode, and what we can observe is a sharp decline is missing, but we are more of a time correction rather than a significant downward price correction on the lower level. We have seen the chart formation like lower tops and lower bottom. Today also, market Nifty made a lower high kind of a pattern around 19,452 levels. Last 3-4 days, Nifty was moving up gradually and made a lower high at 19,452 and declined. So overall chart pattern is indicating that some more decline as per the lower tops and bottoms. Nifty is likely to test the recent lows of around 19,229, 225 levels, could break below these levels as per the this theory. So the friends, the overall chart pattern is choppy. Nothing significant is happening on the daily time frame. The support is being repeatedly testing, and at the higher levels, 19,400, 500 is acting as a strong resistance. Look at the weekly time frame chart. What we can observe is a gradual decline over the last 5 weeks. So the gradual decline, in the sense, we can observe from the daily chart that in previously these type of candle pattern have been formed at the lower tops or a top reversal pattern. What we can observe on the daily weekly chart is that long range negative candles at the higher levels, and market has declined. In this occasion, these occasions, markets have declined substantially from the higher level. That kind of pattern is missing. Last 3-4 sessions, 3-4 weeks, market, even though declining gradually from the upper levels, the range of the market is seemingly very low. So this indicates there is a lack of sharp selling interest after the formation of high around the 19,990 levels. And yeah, and last week we observed the formation of bullish candlestick pattern, which is inverted hammer type candle pattern. Normally, technically, inverted hammer is a bottom reversal. We need confirmation of this for any bottom reversal pattern, which indicates at the form that a 10-day EMA, that indicates that there is a possibility of a strong support at the lower levels. There is a possibility, there is a support of 10-day, 10-week EMA somewhere around the 19,200 levels, and the strong support of trend line, which is as per the concept of change in polarity, is placed around 19,100 to 19,000 level. So all in all, this at the lower level, there is a strong support placed in terms of 10-day EMA, and the support as per the concept of change in polarity. And the bullish kind of a pattern was formed last week, which is the inverted hammer type candle pattern. And last 4-5 weeks, we observe a gradual decline, means a lack of selling pressure from the high is missing. All these are indicating, though Nifty declines further from here, there is a strong support is placed at 19,000 to 19,100 levels, where one may expect a significant upside bounce. Currently, on the daily chart, market is showing lack of strength to sustain the highs. We observe after a small upside bounces, market is reacting on the downside, and it is clearly indicating that it is showing a lack of strength to sustain the highs. On the weekly time frame, we observe that overall trend chart pattern on the long-term basis is still intact, and any downward correction from here is going to be a buy and dips opportunity. So at the lower levels, I'm reiterating that Nifty could find support around 19,000 to 19,100 levels, and we are likely to see a significant, decent or sizable, what you can say, sizable upside bounce from the lower levels. On the monthly, friends, after a sharp up move of the last 4 months, reacted downward is as usual on the charts, that after a significant movement of the last 4 months, Nifty shifting into a reasonable downward correction. Currently, Nifty is placed a long-term support of around the 19,000 level, which is the trendline support as per the concept of change in polarity as per a larger degree. You have seen in the weekly time frame, similar kind of a support is placed, and on the monthly time frame is also the same support is placed. So on the conclusion side, we can say that market trend of the market remains choppy. There is a lack of strength to sustain the highs. We observe that range bound movements on the higher levels, and market is showing weakness from the higher levels. Sell on rise opportunity kind of a pattern is happening. And at the same time, we expect some patterns building up, and we expect Nifty to move below the 19,200, 250 levels, which is the immediate support, which has been tested frequently over the last few weeks. And on the lower side, on the lower below 19,200, 250 levels, Nifty is expected to find a support around 19,100 to 19,000 level, and we are expecting the upside bounce. Sectorally, friends, there are mixed trends are been observed. Metals, look at the charts of metal. Metal is looking slightly positive after showing a range bound action placed at the upper range. There is a possibility of some more upside in the metal, as well as realty also. If you can see the realty chart, made an upside breakout after the showing consolidation moment at the lower level. The trend strength remains intact. 10 period EMA is offering support for the realty. And on the automobile is also showing some consolidation movement and showing upside moment after the range bound action. On the downside, there are few sectors showing weakness. First is one oil and gas energy sector. If you look at the chart of energy sector, we can observe that continuously coming down from the higher levels. Last 3-4 sessions, what we have observed is a range bound action, and I'm expecting some more decline in the energy sector for some in the short term. And the oil and gas sector, if you look at the chart of the oil and gas sectors, what you can observe is continuous downside momentum in the chart pattern over the last few weeks, and this is oil and gas, what we can observe. A continuous downward correction over the last 1 month, and market is, this oil and gas sector is likely to slip down to the immediate support of 20-day EMA and the trend line what we can observe. Even though higher tops, higher bottoms is intact, you're likely to come down further. So these are all from the technical side. Now I would like to request my senior Devarsh to take over this form.
Okay, thank you, Nagaraj. Is my screen visible?
Yes, it is visible.
Okay, so as I pointed out, there are 4 new fundamental recommendations which we have issued. First is the Aster DM Healthcare. It is one of the largest integrated private healthcare service providers in Gulf and in India. The restructuring of the Gulf business is happening, and there are possibilities that the GCC business can be sold. The restructuring could be announced very soon. If that is happening, that critical could further re-rate this Aster DM. So for target of 350 and 374, we have issued the first report, Aster DM. Second company is into stationery, basically the writing instruments or the pen. The famous company is the Link Limited, where they have tied up with the technology called for the distribution of Mitsubishi Unimall brand into India, and also the Japanese company Delhi, the Asia's largest stationery manufacturer. They have been transforming their business from purely writing instrument companies into enhancing their brand visibilities and also trying to decommoditize their business. Here we are expecting 681 and 745 as the targets. So second idea which we have issued is Link Limited. Third one is Datamatics Global Services Limited. Data driven enterprises. It's a technology and services company mainly into digital experience and digital technology, and they have businesses across various business lines like manufacturing and publishing, international organizations and hospitality. The company has strong fundamentals and they have stable revenue, stable profitability, zero debt, and healthy balance sheet. Automatic fare collection is the big opportunity where this company is growing in India and US. Their collecting of fares automatically gives us the confidence that this company can achieve targets of 604 and 646. And the last one which we have issued is the Fusion Microfinance. As the name suggests, it's a NBFC microfinance company, and it is available in 20 states. They are doing business in 20 states and they have 1103 branch. Basically, it's a microfinance business where it is more into the lower ticket, under-penetrated rural areas and underserved areas where they are putting up the business. So again, they have a diversified funding profile and experience management, and they are likely to increase their AUM, which is right now at 9,700 crores. So there we are envisaging 691 and 759 as two targets for Fusion Microfinance. So Fusion Micro, Datamatics Global, Link, and Aster DM are 4 fundamental ideas which we have issued this week. Now we have a couple of minutes, so if you have any questions, we can take them one by one. So depending upon the instrument or the phone you are using, you should see a question mark on your screen. Click on it and put your question on the window which is appearing. We'll try to answer as many as possible in next 10 minutes, next 5-7 minutes. Okay, so first question is from Mr. Tanmay Patel. He is looking for outlook on Nifty Pharma Index. Nagaraj, how is Pharma looking?
Yes, Devarsh. Pharma is looking range bound action. Over the last few sessions, we have seen a significant. Sorry, over the last few months, we have seen a significant upside movement. Later on, it shifted into a range bound action. Currently, there is no clear-cut movement on Pharma. A range bound action is going on.
Okay, so overall, Pharma has been underperforming and they are likely to bottom out. So next 3 months could be a tricky accumulation phase, but after that, we expect Nifty Pharma and Nifty Pharma Index to do well. It has bottomed out compared to Nifty. We have used Nifty Pharma to Nifty chart in a couple of our weekly reports to indicate that the Pharma Index has bottomed out. So Paytm is one more e-margin calls. So 60 to 70% of the e-margin calls do work out. We have a success ratio, long-term success ratio of more than 70%. 1 or 2 ideas out of 10 may hit the stop loss. Also, right now there are a lot of bull deals and a lot of deals in Paytm, and that's why it is struggling. But we have hopes that this can also do well. Individual new ideas we won't be able to discuss here, but if you have any question on the existing idea, we can surely help. IT is finding a lot of problem from the US. The US large cap corporations are not increasing their budget for IT services, and that's why Indian companies are not hiring that much and they are struggling a little bit. They could consolidate at lower levels. Over a longer term, they have a lot of business potential. The new business areas of machine learning, artificial intelligence, data, cloud, all these integrations and digital side business will help them grow their business. So it is not the peak of IT companies. There could be some few months of consolidation, but over a longer term, we continue to remain bullish on IT sector. So there are some long-term ideas from Nifty 50 which we have covered in part of our SIP report. Mr. Alok Sharma is asking. So if you can see on our screen, there are many like say Sun Pharma, Tata Steel, Reliance Industries, NTPC, Larsen and Toubro, ITC, Infosys, ICICI Bank, Bharti. These are large cap stocks, large cap mega companies which you are looking for. These are the stocks you should look for longer term investments. Okay. Outlook on cement sector, Ram Y is asking. So what happened in the cement in this quarter? The raw material and the energy cost for the cement companies went down. So they could have earned a lot of more profits, but companies chose to pass on these benefits to the customer and they chose to reduce the prices so that they can increase the market share. So market share gain is the game for the cement companies. But I think that eventually these companies will have a higher margin, and since we have elections coming in state and center, allocation toward infrastructure will rise. That means demand for the cement companies will continue to be robust. So I expect cement stocks to do well over the next 6 to 12 months. So at the lower levels, one can accumulate a lot of cement company. So Pro Terminal, so we'll ask, you can ask Mr. Umesh Bhagwat is asking about Pro Terminal. So this is one of the specialized software which we had for the advanced traders. But now we are gradually transitioning all our softwares into a new application called Invest Right. I would request you to call our customer service desk and take a demonstration of that new application which we have designed. All right, I think this answers all the questions we had. Any closing comments from you, Nagaraj?
Yes, friends, market is showing confusion confusing in the short term. Neither it is showing upside breakout nor it is showing witnessing a downside breakout. Keep in touch with the research. You'll get the latest updates on the market.
Right. So markets have been in a correction for last couple of weeks. Mid cap and small caps have been rising. There's some stocks have gone up beyond their recent fundamentals. So it is better to be on the cautious side. Do keep following research. We are coming out with recommendations from all the categories, but otherwise it is better to be little safe at this level and conserve cash, so that if there is a correction in the market, if there is a larger correction, you can utilize the corpus you have to accumulate more shares at the lower level. So on that cautious note, we can close this webinar. Happy Raksha Bandhan to all our viewers, and we hope you have a wonderful festival season ahead. Thank you for joining, and we'll close this webinar. Thank you, Nagaraj.
Thank you.